Good morning and welcome to the TurtleFollower.com, where we teach you how to stop predicting and start reacting. My name is Steve, and in this video we're going to take a look at the stock market for Saturday, February 13th, 2016. We had an interesting week. We really sold off essentially for the first 4 days of the week. It looked like we were headed to new lows. Came right into a key support area, and then Friday saw a significant bounce. The AES was up 35 points. SPX, same thing, 35 points. Dow was up over 300. So not uncommon considering where we are. Okay, we're understand that you get a lot of these big moves to the upside in the market when the stock market is actually trending downward. All right, and that's because there's a lot of short selling that comes in. The short selling leads to a lot of these rips that move higher, and then ultimately they reset, and then we see ourselves lower the following week. So I just want to go through the four major indices, the S&P, the NASDAQ, the Dow, and the Russell. Take a look at where we are. Also take a look at the sectors that we're in, looking through the 9 sectors that make up the SPX. And then I want to just leave you with one interesting note at the end that don't shoot the messenger type of thing. So definitely stick around to the end of the video and figure and take a look at what I'm about to show you. Again, it's a do not shoot the messenger type message that I want to deliver. But first, let's, like I said, look at the ES. ES very similar to the SPX, and you can see that here we are looking like we're going to move sideways, looking like we broke down, but again we came right into that 1810 area. Okay, we've touched it once on 824, again on the 20th of January, and then here we are again. So a lot of people, a lot of technical people don't believe in triple bottoms. All right, basically a double bottom is fine, a triple bottom could signal some further weakness. So I'm kind of in that camp. Obviously it's a key support area, but the way we've kind of come into it so quickly again since January, I'm tending to lean towards this eventually breaks down. All right, and you can see if we look at the weekly chart, that same 1810 area has been some very key support going all the way back until 2014. All right, all the way back to April of 2014. So you could see all of the touches. You have one here. You have another one in in October of 2014. You have the one in August, and then you have the one from January, and again the one from this week. Okay? So there we are. But as you can see, and what concerns me a little bit here is the first time we came in, we touched it and we rallied very hard. All right? The second time we came into it, we had much less of a rally. Okay, we only made it back to the 1930s, and now we're touching again. So from my perspective, I'm looking at this as any other short candidate on my trade list. All right, and that is that we are consolidating on the daily below a weekly breakdown. All right, looking like that maybe this wants to go ahead and roll over. All right, so here we are. You can see that we came back in on Friday. All right, but we didn't make it back above the trend line. That is going to be the first key area that I think needs to be tested. If we can break out through the trend line, then obviously the next area that would be tested would be back in those 1930s. But this week is very important to see how we react at this trend line, because this week, even if we go sideways, we will hit that trend line this week. Okay? So the question is, do we hit the trend line and roll over? Or do we hit the trend line, consolidate, and break through and test 1930 and really just put in one large base? You can see that same thing on the SPX. If we take a look at that, similar situation. All right, here's that same consolidation. But you can see here that we didn't even really make it back into the area. As far as the SPX is concerned, not the futures, we've broken down. All right, this is a breakdown of this level. All right, 1876, 1850 it is on the cash, and maybe this is just a retest of the bottom of that breakdown. We'll see. All right, so that's why we kind of look at not only the futures but the cash portion. All right, I tend to like to look at the futures more than anything else. NASDAQ, similar situation. All right, this is kind of what I'm concerned may happen in the SPX, where we had a consolidation along a downtrend line. Sure enough, we got the breakdown. And what are we doing now? Well, instead of bouncing off this level, we're just consolidating again, however you want to draw the box. But essentially, we could consolidate. Let's get that fancy highlighter tool out so I can draw a little. All right, we could do this and then ultimately break down again. All right, so there's a couple different ways that this could play out. You know, again, I have no idea how this ends up. All I can say is at this point, even though we rallied very hard on Friday, this isn't a good situation in my opinion. All right, I don't think that this is the type of market that all of a sudden recovers because of one strong move on a Friday afternoon before a long holiday weekend. All right, that's my personal opinion. Think about the mindset of other traders. Think about the mindset of these short traders that were out there, all right, that were sitting there and shorting the stocks all week long. They made their profit, okay? Now they're buying their shorts back, all right? So when they buy the shorts back, that obviously puts pressure to the upside because they don't want to be short over the weekend. Remember, shorts are not the same as longs, all right? Shorts hold a higher risk than longs. You could lose a lot more than you put in a short trade. All right, and if you're unfamiliar with a short trade, definitely go over to the turtlefollower.com/university and hang out in the TTF University. We have a bunch of advanced videos. One of them does go over short trading, but just understand that shorts, essentially, you can lose a lot more than you initially invest in a short trade because you're essentially buying on credit. All right, but so that's where that's my stance coming into this week. Here you can see the same thing in the NASDAQ composite. We're at lows. All right, we're essentially at the lows, and I just don't think that the bottom happens on a Friday afternoon before a long holiday weekend, at least here in the U.S. All right, here we are looking at the Dow futures, and the Dow futures held up a little bit better, all right, than all the others. You can see that it really hasn't broken down. It's still just bouncing off the bottom of the range. Didn't even go back to test that 15,500 or 15,300. It kind of stopped at 15,500. But again, you know, ultimately, where are we? We're stuck underneath a downtrend. All right, so again, what happens when we get back to that line? And nobody can answer that right now. I have no idea. And if somebody tells you that they know, no, maybe they have something that I don't, but I have no idea what happens when we get back to this trend line. All right, my inclination would be that this rally that we had on Friday, I wouldn't be surprised come Tuesday or Wednesday that we're trading lower than the close of Friday. All right, that's just my personal opinion. I would not be surprised to see us trading in the bar or even lower than the bar come those Monday or Tuesday and Wednesday, because remember, markets closed on Monday for the US. All right, last but not least, the Russell. All right, the Russell is broken. All right, you could see that very clearly. This is, we talked about, you could potentially get short this, you know, and sure enough, you're underneath a trend line. All right, so this is one of those types of things where, you know, look at it, don't look at it as what it is for the market. Look at it as any other, forget the symbol, okay? This comes back down to simple price action. If you take the symbol out, you know, what do you want to do to it? Do you want to be long or short? Underneath the 200-day moving average, underneath the 50-day moving average, underneath a trend line, I'd much rather be short than long. All right, so that's where I'm looking at the Russell, and you can see the same thing on the actual cash portion as well. All right, you have that same downtrend line. All right, again, a bounce. Yes, it was a bounce, but I think that's all it is. I don't think this is a bottom. All right, I just think it's a bounce. All right, so that's where we're looking with the markets. Now let's take a quick look through the 9 sectors. All right, XLB, the materials. All right, again, just not the best situation. Okay, you have this big consolidation on the weekly. All right, that broke down. What did it do? Well, it led to another consolidation. Sure enough, we had a little bit of a rally, but we came right back into the bottom of that weekly consolidation. Not exactly any type of move you would want to look to get long. All right, here, same thing. XLE just continues to make lower consolidations. All right, just continues to move lower. Again, below the 40 week, below the 50-day, all right, and below trend line. Okay, trend line there. You can look at maybe there's a trend line through here. All right, again, not something I want to look to get long. All right, the XLF, that was where a lot of the strength came from on Friday. All right, came out of the financial sector. But again, where are we in this whole grand scheme of things? All right, are we looking at new highs? No, absolutely not. All right, we're looking at a breakdown from a key area. All right, and we're looking at continuation to the downside. All right, now, yes, could this break the trend line, come back up to 50-day? Sure, absolutely. But again, not the type of chart that kind of gives you the warm and fuzzies. All right, and just not there. All right, again, similar situation. XLI. All right, everything is trending downward. All right, here you can see the XLI on the weekly chart. Downward. All right, yes, we're at a key support area. Okay, right here at this 48 level. You can see that that's been key support for some time now. All right, but again, you're underneath of the moving averages, you're underneath the trend line, not a good spot to be in. The XLK, while it's not breaking down to new lows, it is at the low of the weekly consolidation. All right, so again, what happens here? Does it bounce? Do we end up back at the trend line? Do we see resistance at 41? Lots of questions remain to be answered. All right, none of them are showing me any type of strength that I want to see to be confident that this market is going to reverse. I'm not seeing it. All right, looking at the staples. The staples are ones that people flock to when markets are going lower. They usually have a higher dividend yield. They're considered the safety net. All right, and sure enough, they've been outperformers. All right, we had a nice big move in late January in these. They went all the way up, tested the resistance of 51, and now they're back in the middle of the range. So this one, not too bad, but again, not breaking out the new highs. XLU, all right, XLU was one that last week or even the week before had this gigantic move in the XLU. All right, the utility names had a nice breakout on the weekly. This week came in and it was sold off. All right, so a lot of the strength is being sold. XLV, all right, again, trending downward. Underneath trend lines, not really what you want to see. XLY, similar situation. All right, breaking down to new lows, continues to move lower. All right, if you could draw a trend line that goes from top left to bottom right, you know, it's not the best situation you want to be in. And as I said, that goes for everything. All right, don't worry about what the symbol is. Don't think about what it is. Just look at it from a price perspective and just ask yourself, is it trending up or down? If it's trending down, is it at a key area? Sure. All right, they're all at key areas. All right, but the question then comes in is you have all this overhead supply that can potentially push you lower. You know, is this the time you want to be putting money to work? I'm not that kind of a trader. All right, I'm not a value type trader. That's not how I work. There's probably, for every, you know, trend follower and technician, there's equal or if not more value investors, but that's just not how I am. All right, so people may see value. Hey, you know, the S&P may not get this low in the next 10 years. You're absolutely right, may not. All right, but it could obviously get lower. And for me, there's no way for me to know when I'm wrong becoming a value investor. So that's why I really like to look at the charts and the charts only. All right, so essentially just to put that in a nice little nutshell for you, I'm not ready to commit capital to this market to the long side. I think that we eventually break down. I think we can potentially go lower. With that said, let's take a look at this is a 20-year monthly chart. I'm sorry, it's not a monthly chart, it's a weekly chart, but I'm going to make it a monthly chart. 20-year monthly chart. Okay, so here has been the move since 2008, all right, the financial crisis, to where we are now. Okay, and you can see that we've hit a lot of nice time, you know, a lot of times on this trend line. And we just recently hit that in August when we had this pullback. January, we traded below it, but we were able to recuperate that. Now look at where we are in February. All right, look at the last 3 months. All right, December, January, and February. All right, continually making new lows. Yes, we found some same support at this 1810 area. My concern here, okay, is if we break down from this trend, and I illustrated this the other night, if we break down from this trend, remember, old resistance becomes new support. Breakouts usually get retested. All right. So, and I have no idea if this will ever happen, but it is a possibility. If this is a breakdown of this uptrend line, all right, the next key monthly support area that I see on the S&P is down here at 1550. All right, that's 300 points in the S&P from where we are now. Again, I have no idea if it happens, but I'm looking at this as a rounded top. Okay, you can see we had a nice move, then starting to round over, and we could even use the fancy highlighter tool to kind of illustrate this. All right, so essentially it's going up, everything looks good, and then you start to kind of curl over and this. Okay, now it would not surprise me to see this type of move. Okay, that would not surprise me in the slightest. All right, again, it's not necessarily what could happen. It's just a possibility, and that's an awful line. I apologize for that. But essentially, if you look at where we came in, all right, we've had so many touches of this trend line. Okay, touch here, touch here. Here we had a breakdown, all right, but look at where we are with the highs. All right, lower high, lower high, lower high. So I would kind of venture to guess that we continue to see that, and until this monthly chart sees a breakout back above a previous monthly bar high, I think we're more in a downtrend than we are in an uptrend. All right, and that would be one of the key areas that I would look for. So essentially, if we had a bar that came down like this, and then we had another bar that did this, then I would say, you know what, maybe now momentum shifts a little bit to the upside. All right, but until that happens, I think maybe we could potentially see a further breakdown, and the next key support area is going to be down here in the 1500. So it's very possible that this is just not a bullish year. All right, that's the possibility. But again, we'll see how that all plays out. So hope you guys enjoyed this one. I'm not trying to rain on the parade too much. I just want you to be aware of all the possible outcomes that we could see. While we did have a nice bounce on Friday, I just don't see it as the bounce. I just see it as a bounce. All right, I just see it as a potential letting off of some steam to the short side, and maybe the shorts come in and look for some higher prices to get back in. But market right now, with all the sector analysis and everything like that we look at, doesn't look like it wants to go higher. So that's where we are. Again, I hope you enjoyed it. Enjoy the rest of your long weekend, and we'll catch you next week. Take care.